it comes to improving cash flow in your business, the number one thing you can do is understand how to read your income statement and make moves in your business to improve your bottom line net income. Now, you might be thinking, thank you, Captain Obvious. I need to improve my net income to improve cash flow. But as we've seen in some of the other videos, and if you've seen our guide to improving cash flow, there are a lot of other things from the balance sheet that can impact your cash flow. But it has to start with a sufficient net income to support the ongoing cash needs of your business. So let's take a look at and make sure you understand how to read your income statement. And I'm just going to pull over here. This is the sample data file for QuickBooks Online. And let's just take a look at what the components of the profit and loss statement. Now, I said income statement earlier, profit and loss statement. Those are interchangeable terms, mean the same thing. Let's run a P&L for the sample data file, Craig's Design and Landscaping Service. And so in the top section, it's all their revenue from the different income streams that they have. Design revenue, landscaping services, pest control, whatever the different types of revenue streams that are in your business, whether it's a product or service, you'll want to see a little bit of detail up there in the top income section of your income statement. The next section is your cost of goods sold. Now, those are the costs that are directly allocated to the products and services that you sell. And there's not much detail here on this income statement. You'd want to have a little more depth here so that you understand the different components of the direct costs directly allocable to what you sell. Every time you sell something, these costs are incurred, whether it's product, whether it's direct labor, whatever the case might be. Once you've subtracted your cost of sales, your cost of goods sold from your net income, that provides your gross profit. And from gross profit, you need to cover all your operating overhead expenses, OPEX, in order to produce some net income. And your operating expenses, there should be some detail here on your income statement. And I wish we were sitting down at the table across from each other so we could look at your income statement directly. But let's just look at some of the detail here in the sample data file. Automobile expense, insurance, there's probably some office expense here, rent expense, if there's any indirect labor, admin labor. Now, that's interesting. They have job expenses down here as part of their operating expenses. That really should be up here in cost of goods sold, because if it's a job material or a job expense, it's directly related to the income that's been produced, and it's a direct cost. So that really should be moved up here to give them a true gross profit on their sales. Once they've covered their overhead expense, that should give them their net operating income. Now, there may be some other income and expense. If you have interest expense in your business or depreciation, amortization, some of those non-operating expenses really should be down here below the net operating income before we get to your net income of your business. So I hope that helps you understand the income statement a little better. If you want to know more detail about that and how to make some moves to improve your net income so that you're improving your cash flow, go to our website or click the link below this video and look for the Business Owner's Ultimate Guide to Improving Cash Flow. Thanks for listening, and I'll